Well, I'm delighted today to be speaking to Rob Stewart, who is the fund manager for the Melville Douglas Global Impact Fund. Welcome, Rob.
Thank you.
So we're going to talk a little bit about impact investing and your fund here at Melville Douglas. But before we do that, it'd be great to hear a little bit more about yourself, or your background and experience in investing.
Yeah, so my background is quite varied. I studied environmental sciences at university, did honours in wildlife management, was actually a game ranger for a year.
Wow.
At a private lodge. Got a little bit bored of that, so then did a bridging course to get into finance, and have done additional finance qualifications after that, and joined Standard Bank in 2002 in South Africa. Joined Melville Douglas, which is a subsidiary of Standard Bank, in 2005, and then ended up as head of portfolio management in South Africa. Moved over to Jersey with the business, I find myself managing the impact fund.
Fantastic. And in your career, how have you seen this field of impact investing kind of develop and mature? We're still at the journey, on the journey of it, but how have you seen in those 20 years some of these trends and themes and conversations you're having with investors develop and change? Yeah,
so the impact investing sort of space is quite new. People are still trying to get their heads around it and look at it as a sort of viable investment strategy, what it's trying to achieve, what ultimately the returns will be. When I joined the industry, ESG wasn't really even a term that was widely sort of known out there. A lot of companies didn't sort of incorporate pure ESG into investment processes. So there's been, in the early days, it sort of wasn't really a consideration. You just looked at outright returns, what is going to give me the best return, whether it was a polluter or a company doing good. But a lot of that has changed, obviously, as all these additional risks have appeared. We've got climate crises, biodiversity crises. So it's becoming a lot more apparent. It's sort of front of mind. There's a lot of legislation. We have to do something to try and preserve humanity. So certainly the incorporation of ESG has become now sort of mainstream. Most investment houses are doing that. And then impact investing is really the kind of new frontier where you're positively selecting companies that are deriving a tangible, positive social environmental benefit, but also giving you good competitive returns.
And how would you differentiate that from responsible investing? Or where do you find even amongst the professionals or the clients, do you end up breaking down what you're doing and differentiating that in a thematic way?
Yeah, we do. And I think it's quite important. So, responsible investing is really just incorporating ESG into your investment process, having a policy around that and looking at all those factors, whereas impact investing is the kind of sharp end of the ESG spectrum, as I mentioned, where you positively selecting for companies based on generating a positive social and environmental impact. Also, they must
not just removing doing harm sort of thing, but really going for that positive outcome.
Yeah, exactly. So they need to be extremely progressive. They need to be showing that they are progressive from a diversity and inclusion perspective. They're either avoiding emissions, they're becoming more energy efficient, but really delivering sort of positive, tangible impact that we can measure based on metrics that they disclose.
And what kind of themes are you playing within the impact fund? Give us a sense of what your investors are sort of buying into.
Yeah, so we've got three themes which we play: climate change, biodiversity preservation, and health and well-being. And that's really a function of what we see are the world's most pressing challenges out there that need to be solved, sort of based on the risks and the impact of those.
So in climate change, it might be finding good renewable companies doing something different, or what kind of company might be you be investing in to play, say, a theme on climate change? Give us a sense of that.
Yeah, it's a good question, and it's quite a broad theme. So, the way we look at it is if we break it down into sub-themes, there's actually quite a very diverse segment of companies you can play through climate change. So, obviously there's the companies which are renewable producers, for example. They can be solar producers, wind farm operators, etc. But then also some of the other companies who we view are extremely progressive in terms of utilizing renewable energy to power their operations, thereby avoiding emissions. So companies you might not necessarily associate with a climate change theme.
Operating in another sector, but just using its energy very wisely.
For example, like a Microsoft, which has been carbon neutral for many, many years. They have an aim to be carbon positive by 2030. So really, powering the majority of their operations on renewable energy, thereby removing and avoiding many, many tons of carbon dioxide.
And do you think that climate change is a theme that a lot of people can kind of coalesce around because they see the impact in terms of on the planet, the extreme weather's widely reported, and it's not, in a sense, controversial to anyone that climate change is a problem that needs to be solved. Do you think that investors can get behind it in a way that other parts of perhaps ESG or other parts of the spectrum can be less easy for them to support?
Yeah, very definitely. Because we're seeing the effects of more extreme weather events. We're seeing they're becoming much more costly, much more deadly. It's impacting everyone in terms of what we have to pay for goods and services and insurance. It's displacing people from their homes. It's having a massive impact. So really, the evidence is there that climate change is real, and we have to address it. So I think it is easy for people to kind of see the impacts and the real world impacts in terms of just the cost of living, the cost of doing business.
And do you interface directly with family office clients or those who are passionate about these areas? Or you're interfacing amongst Standard Bank with the advisors. Are they feeding through and telling you that, like the climate change agenda, this is something that clients feel passionate about and want to try and solve, or have their portfolios reflect these, passions that they have?
Yes, it is. Melville Douglas is a private client business. So I used to be a portfolio manager, have my own private client relationships, but we interact very closely with the portfolio managers, and certainly some of the commentary and feedback they're getting from clients is clients want to see more deliberate investments into companies that are actually doing good. Obviously, the returns are important. Everyone wants to, retire well. But definitely, there's more and more interest from clients around, what can we offer them in terms of a product where we're delivering positive impact and not just solely looking at returns.
And on the theme of healthcare, what kind of companies do you find to invest in that will play that theme?
Yeah, so healthcare, we're looking at companies who are actively trying to lower the cost of healthcare, improve access to healthcare. So a lot of the managed care operators who have a very broad customer base. We're also looking at...
Is that in developed and developing markets, or which kind of geographic locations would you operate in around healthcare? Is it agnostic on that?
Yeah, we're typically focused. The majority of our stocks are US listed, so
Right.
so there is a focus specifically in North America and the developed market. But some of the companies that we invest into, so Thermo Fisher, for example, they do diagnostic test kits, which were used widely, for example, during COVID, to test for the presence of COVID, and those were used sort of widely throughout the developing world as well.
So I guess US company, but with a global client base, keying into the demographics and the trends that are playing out in those countries.
Yeah, absolutely, a global reach and doing a lot of work in developing economies, which is very important.
So I imagine to play these themes, you're looking at a huge amount of data and different companies that fall in your initial kind of pique your initial interest. Tell us a little bit more about the research process and how you'll go about selecting companies for the fund.
Yeah. So as part of Melville Douglas, we have quite a rigorous and rigid process. So we screen the universe of companies based on a number of valuation metrics that we look at. So good profitability, high return on equity, persistence of earnings growth. We also put in a market cap filter as well. And then out of that, we really filter the universe down to a more manageable universe of stocks, which we'll then look at. On the impact fund side, it's a little bit different. So we will use the core of that process, but we'll also have a thematic overlay. So whatever comes out into that universe, we will overlay our themes onto that, and then select companies based on that. We have then a second stage, which is an impact assessment, a proprietary impact assessment, which we developed. So we look at a whole lot of the company's metrics in terms of what impact they are delivering, how those metrics are trending, whether they're doing any harm in their business operations to any other social environmental areas. But then we also have some flexibility to look at earlier stage companies as well. So traditionally in the Melville Douglas Global Equity Fund, you will find more established companies, whereas in our fund, we do have the flexibility to look for earlier stage companies, which may not have filtered through on our initial criteria, but what we believe will become Melville Douglas companies in the future.
And those smaller companies can be more risky, but also the return profile can be that bit more exciting, isn't it, with a longer time horizon, if you like?
Yeah, no, absolutely. I mean, they come with a lot of risk. I mean, some companies, may not be profitable at the moment. A lot of the technology they're using is new. They're continually refining it over time. But they're companies where we certainly believe in the technology and specifically in the clean energy space. Hydrogen, for example, we believe that it will be an important component of the energy mix by 2050, but it's really kind of in its infancy at the moment.
And are the data sources available to fund managers? I mean, particularly, I suppose, for US companies are available and improving, isn't it? The data and measurement is a big question in this field, isn't it? Particularly when you're looking at such a wide range of variables as an analyst. I mean, how do you find, the data sources available and what's developing in that field? Do you have more of the tools that you need now to make these decisions?
Not quite yet. It varies a lot. I mean, some companies' non-financial reporting is quite poor, and where we've come across that, we've actually actively engaged with some companies to get them to disclose the data that we need to analyze them appropriately. Some companies have excellent non-financial reporting. The regulation coming through is ensuring that companies have to up the ante in terms of what they report on. So it'll become easier for us as fund managers to get access to that data and to be able to analyze all the metrics we need to. But we're very definitely not there yet. But we have, I mean, even over the last couple of years, I've seen big improvements from a lot of companies. But it's still a very, very broad spectrum.
And how many companies are in the portfolio? What's the approximate size at the moment?
Yeah, so the size of the fund is $65 million. We've got 29 securities in it at the moment. Ultimately, we're looking for about 30 to 40 companies. So we want it to be high conviction. We want to take active bets in companies that we really believe in. But at the same time, we're very conscious of taking too much risk, specifically in the earlier stage companies. So through the portfolio construction process, we'll manage the risk based on the weightings that we take to those companies. But yeah, anywhere between 30 and 40 stocks ultimately.
Do you go out and visit the companies you're investing in, or it will be done remotely on the virtual call and the packs of information that are available, or do you go and kind of press the flesh and go and see the companies you're taking stakes in?
Yeah, it's quite difficult because we're investing in global companies and some of the bigger names, it won't be easy to get access to management. So as a team, we try our best. I mean, we go to quite a few conferences around the globe where often the CEOs or the CFOs are presenting. On the odd occasion, we do get access to senior management where we can ask questions. From some of the sell-side research that we use, the brokers are very good at also setting up virtual meetings and fireside chats. So we do get quite a bit of access to management, and we can certainly post questions, whether it's either directly to them or through some of our brokers.
It's the beauty of the virtual environment, isn't it?
It
allows
is.
the efficiency.
Yeah.
And what do you think on the philanthropic side? So philanthropic foundations, trusts, and their role as investors in this space. I mean, often if there's a charitable trust, it will have restrictions how it can invest. Are they a type of audience you think for an impact? Not only private clients can obviously invest directly in an impact fund such as this in their own name, but do you think the charitable philanthropic field is a good investor for this kind of fund?
Yes, absolutely.
Yeah.
I think what's quite interesting in the impact space, the sort of pure impact investing is really philanthropy. So where you're not too concerned about the financial outcome, but you're investing purely for a set social or economic objective. In our listed equity space and with the fund, we need to be delivering competitive financial returns. Otherwise, to an audience of investors, it won't be compelling if you're not able to deliver the returns. So it's sort of finding that balance between the very progressive, impactful companies, but also the ones which are good companies and from a valuation perspective where we can see good upside. So definitely.
Do you think it's last year in markets was a difficult one, and obviously the energy sector and other stocks performed higher than necessarily more ESG friendly portfolios?
Yeah.
Do you think that means that investors had to keep the faith in this style of investing through those times when there was a divergence in returns, or did you have more conversations with clients about keeping the faith in this field at that point, or you're already dealing with such high conviction investors who are committed to this field that it's not really, it's a moot point?
Yeah, I think our client base are quite sophisticated, so they understand the volatility of markets and why the market behaved in that way, why our funds behaved in a certain way. But definitely last year was very tough for the kind of ESG focused stocks. That whole premium that had been built up in 2021 completely evaporated. Probably rightly so, because there was more of a focus on the cost of living crisis, inflation. So really there was a different focus, and people started looking at at returns, where they can get the most returns. So it was a difficult year for our space, but our clients definitely have kept the faith. They're very comfortable with Melville Douglas, with the philosophy, what we're trying to achieve. And the reality is that the market doesn't go up in a straight line, but at the end of the day, if we can show them the conviction we have in these good quality companies, and what we expect these companies to deliver, they will ultimately benefit handsomely from that.
Thank you. Well, it's been terrific to talk to you today. Thank you so much, and we look forward to sharing this interview.
Thank you. It's been a pleasure.
The latest technical content delivered through global conversations with professionals for professionals.